Andrew, welcome to the podcast.
Thanks for having me.
Yeah, I'm excited to chat with you some more. Chat with you about insurance, as we were just talking about. If you're in real estate in any capacity, I'm sure you've had insurance questions, issues. If you're a homeowner, you've had issues, right? It seems like a lot of people have had concerns the last few years.
Absolutely. If you drive a car,
Yeah,
if you own a boat,
yeah,
everything's gotten more expensive.
yeah. It's crazy. So, take us back to the beginning of like your start in insurance.
Okay.
How and why?
Both good stories. How and why. So, during the middle of COVID, I was doing real estate in Hawaii, and actually the beginning of COVID, I was doing real estate in Hawaii, and my wife and I moved out there. We've been out there for about almost a year when COVID sparked up, and we were living very comfortably, and COVID just completely shut down the island, and sales out there. That was really tough. You couldn't leave your house at some points, and very, very strict rules. And that made me panic. And I'd never even considered something like that ever happening,
I don't think anybody did,
I
right?
don't think anybody had, man.
Like that was never on anybody's radar.
No, and that's what the crazy part was. They started talking about it, and you're just kind of blowing it off like, oh, this is nothing.
Right.
We went with swine flu, this and that. Like, we've heard it all. So no one was expecting that, and that was absolutely terrifying. I was a new father. My son Andrew Jr. was 6 months old at the time when we got out there in June. So now he was like a year and some change. And he had just turned a year in December. So a year and 3 months. And Aiden had just been born, my youngest. He was born 10 days before they started the lockdown stuff. So coming from that, coming over, I knew I was going to, honestly, I didn't know what I was going to do. When we packed up the family and left Hawaii, I just knew I was going to find something sales related.
And you left Hawaii because of COVID and just not being able to work.
I had a family and I had to do something, and you weren't allowed to leave your house. You weren't allowed to like make an income, basically. They wanted you on assistance, or which was great if there were people who needed it, and a lot of people survive off of unemployment and stuff like that. But I couldn't run a feed 4 mouths, and I just didn't see that going anywhere. They told us when they told us they weren't going to reopen until November, and they told us that in May. That's when I freaked out. So we booked the tickets, came here, had a bunch of opportunities. I was going to thinking about getting back in the car business, selling RVs, all that kind of stuff. And my father had he's in the automotive industry, and he had been approached by some guys with an insurance idea, and he got into insurance. And so I started kind of sparked an interest, started reading about it. Found out what it would take to get licensed in insurance. And the thing that was most attractive to it, or everything I was reading at the time, was that it was an exploding market, because you could work from home, you could do it from home, and it was recession proof, essentially. During those COVID times, everybody was getting a break on paying their mortgage, getting a break on rent. You couldn't get evicted. There were so many things that you could skip on a bill, but you couldn't skip on insurance. And everybody had to keep paying that. So I went, just dove in head first, and kind of got involved with what my dad was doing up in Virginia, but I didn't see it being, in the long run, very profitable, because it was focused mainly on the automotive industry. That kind of insurance, from what I was reading, people switch policies all the time. How many times have you switched, automotive carriers?
Right.
A lot of work and a little reward there. So a couple of friends of mine had gotten involved with Goosehead in Virginia, and they just were always posting online about how they were killing it and this and that, and just really attracted. I would see the hustle. I knew these guys were hardworking people, but they were just living really nice. And so I started asking some questions. I told them what my model was, and they're like, "Wow, you're doing it completely wrong. You got to do it like this." And I went to visit a couple of offices and saw it for myself, and I was like, okay, that's what we're gonna do. And got involved with Goosehead in April of 2020. And when I started out in Florida, if I would call Progressive, or I would call any carrier, I mean, it doesn't matter who it was, Allstate and Safeco, and I told them, I got an agency here and I want to get appointed with you, blah blah blah. And they say, okay, send us your book. We want to know what your book size, value, like loss run, all that. And I was like, no. I'm like, brand new. People like laugh and they'd laugh and hang up. They weren't having a conversation with the new guys.
So you have to you have to build a relationship with the insurance carriers to sell their insurance.
Yeah. So you have to be appointed. So you can have a license, but once you have that license has to have appointments in order to sell insurance. So every single company, that was really what was attractive because when I started out myself, I door shut. No one would talk to me, right? Getting doors in.
And is that because like you're starting as a new agency?
Yeah, and during coming out of one of the worst like losses for insurance in a 2-year run, they had a really rough 2020, 2021 was really rough on them. So me coming, at that time, asking for new appointments, they just wouldn't even talk to me. So I got involved with a company that was similar to what Goosehead does, but there's no back office. All it is they give you appointments and they take 30% up top. So that wasn't doing me any favors. So we tried that and they still couldn't get us appointed with very many. It was like 4 or 5 appointments. That was it. And they were taking most of the profit. So when I approached Goosehead and got involved with that, and I saw their model and how they have, just amazing service on the back end. The technology is crazy. It's second to none. And how much effort and love is put into the technology that gives us all these tools and stuff. I was sold. I was sold on that pretty quick. And so the day I got the agency, they appointed me with 30, 40 different carriers, and they've gone on probably up somewhere close to 50 by now. But instantly overnight, I could help people, and that was what was great.
Yeah. So as an insurance agent, like you get licensed or whatever, like do you have to work with an agency like Goosehead, or can you
if you go and get your license and you just immediately try to get your own appointments, there are a lot of companies that'll do direct appointment. Like you could go to Citizens, and Citizens will direct appoint just about anybody. There's a lot of companies that will. There's also a lot of companies that won't.
Yeah.
So getting started on your own,
you're just limiting
from
yourself
organically, they make it really, really tough.
Right. They want you
there's
to be
plenty of people that do that.
Exactly.
Right. Or they want you to work for someone for a certain amount of time that allow you to like purchase the book from them or something like that. A lot of people get approached by like other companies similar to Goosehead. Goosehead is a very similar marketing, but like State Farm or something like that.
Yeah.
They would say, hey, look, we've seen your hustle over here. Would you be interested in opening up your own franchise or something like that?
Okay.
That's a lot of those guys get started.
Yeah. And like State Farm, like they already have like their book of business or their contacts for different insurance carriers.
Yeah.
Okay.
When we got started, as soon as I signed on with Goosehead, it was like the phone started ringing. They do a really good job with the marketing stuff and like teaching us how to help, like some marketing tactics, and but they set up your Google and LinkedIn and all that stuff. So like almost immediately the phone starts ringing, which is great.
Yeah.
And the way their technology works is we can go into Salesforce and see how all the process or all the sales that have gone through MLS, just kind of like you can, but the way it's filtered out is a little bit different. So I can focus directly on, title agents, or directly on realtors, directly on lenders. Is what we really, that's the big bread and butter. And the way they have it laid out, it's like super, you can do it by zip code, you can do it by area within 5 miles of my office. Like it's really cool the way they have it set up. So that helps tremendously. Because what we do is, probably 50-60% marketing, and then the rest of it's actually selling. Big part of what we do is marketing, actually. Now that I think about it, like we probably spend more time in the week marketing ourselves than we do actually binding policies. And that's kind of a mandatory thing if you want to be present these days.
I think almost in any business probably, right? Like absolutely. There's so much competition out there, no matter what.
There is a ton of competition. Well, and that's the thing too. And I failed at this a time or two, but what I learned early on was that if you answer your phone and you do what you say you're going to do, when you say you're going to do it, you'll be so far ahead of so many people.
Imagine that. Yeah.
And it does sound simple, but there are times where like, damn, I should have taken that phone call. I should have let it go. But that's true. And then you'll hear that from people like, man, you answer the phone. I've called 3 other guys. There was 3 people on this list and you're the first to answer the phone.
Yeah. It's crazy. Doing the podcast now, like a lot of people have brought that up in that type of industry where like service related or home services related, where it's like Like there's so many people out there that just don't answer the phone.
Yeah. And doing so much marketing, we meet a lot of people. And when I first got started, the same with like my agents right now that are coming out of training.
Yeah.
Everyone's really hungry. And so it's almost like you'll work with anybody willing to give you a shot. And then about a year in, you start to realize, wow, okay, there's some really great people I work with. And there's some people that take up way too much of my time with silly things. So that's one of the things that I started realizing like towards the end of last year, beginning of this year is like, when we're goal planning, is like, who do we want to do business with?
Yeah.
That's big too.
Let's dive into that a little bit. Like, how did you figure that out? Is it just by the experience that you had?
A lot of it is experience. And then over the last, like my goal for this year, 2024, was to get organized. Yeah. I've always been, super, super ADD, ADHD, like, little dyslexic, little dysgraphic, like my life's not always organized, especially my office. Right.
Yeah.
So that was my big goal, was to try to organize my time. Cause I would find myself just spending so much time on one thing, or vice versa. I'd be trying to do 10 things at once with 15, tabs open, and trying to just focus that down. So I sat down, I started like writing things down that I thought like took too much of my time. And then one of the things that was repetitive on there was like specific certain agents, or like, clients. And like, I would always hear these like, these sayings like, oh, it's always the 1% of the client that takes up like 90% of your time.
Yeah.
Those things would start to click.
Yeah.
So like I started to get away from the shoppers, the people who are like, I've talked to 3 different agents and I just, my rate went up by $50. I'm not paying that much more a month. Like that guy's going to leave you the next time he gets a rate hike for 20 bucks. Right.
Yeah.
So we have this mentality in the office, and it's win fast, lose fast. So whether that's with a referral partner that's just like extremely, extremely needy, and it's taking up too much of your time on the weekends, like we're not respecting personal like boundaries, kind of things.
Yeah.
I tell my guys, don't stress on those. If you lose that referral partner, they're gonna go beat somebody else up on a Sunday night.
Yeah.
Don't let it be you.
Yeah. Do you think that takes time to like get to that point, to get to that realization?
Absolutely. Because like in the beginning, you're taking everything, anything and everything, because you have to. But and still, I think it's still really important as a, if you want to consider yourself a seasoned agent and you're 3, 4, 5 years in, you should still try to take everything. You still want to win every client. But I recognize now that I won't win every client. It's okay to lose sometimes.
Yeah. I think that's a good point, right? Like you want to help everybody, but sometimes you just can't, right? And you have to I think it's like prioritizing.
Yeah.
those clients.
And depending on the client, sometimes I'll take 4 hours to see if I can really not help this person.
Yeah.
If like that's what I always tell you too. When I ask if like, can I run you a quote, or can I see your deck page? The joke is like, the worst thing I can tell you is you're already in the best scenario.
Yeah.
Right.
Right.
You can't get any worse. I can only make it better. Right. But sometimes you really like the person, or they tell you the story about how they can't afford this and that, and they just lost this job or whatever. So you really like work extra hard for some people.
Mm-hmm.
And then at the end of the day, you can't make it any better for them.
Right.
And we're big on, making sure everyone's covered properly. Cause like we'll have clients who call, hey, no, I just want state minimums, do this real quick. It's all I can afford.
Mm-hmm.
Like, well, all you can afford, if you're talking about a difference of $20 a month, that could be the difference of, 50, 60, $100,000 in coverage,
mm-hmm.
which could be the difference of a wage garnishment.
Yeah.
So I think a lot of what we do is not only just, trying to help the people, but making sure they understand education is huge in insurance. Yeah. When I went through insurance school at Central Insurance School here in St. Pete, Clearwater, I learned so much that I never knew. And it was scary about what's covered, what's not, and things like that. So walking through a policy, and like whenever I hear someone tell me, oh man, I've never heard it explained that way before, like I know I'm doing a good job.
Yeah.
I always want to leave them like, oh wow, okay, knowing more so than they did going in.
Yeah. So let's talk about that a little bit. Like give like a high level overview of I guess let's stick with like homeowners insurance, because that's the big one, right?
Yeah.
But like homeowners insurance, like what are the big items that you need to pay attention to as far as like your coverage goes?
So I think the most important thing is making sure that you're not underinsured. So Florida has like a law, like a 20% co-insurance law. So if you're underinsured by 18, 19%, and it's a total loss, the insurance company has to cover the total loss, less your deductible. If you're 25, 30, 40, 50% underinsured, the insurance company is only responsible for what they told you they'd insure you for once you break that 20% threshold. So if you're 50% underinsured on a $200,000 dwelling, that's $100,000 out of pocket. You're going to be to bring it back to.
And people do that to save on their premium.
They do that a lot. They'll exactly, because for the dollar amount for your coverage A, which is your dwelling amount, that's going to coincide with your premium. So if you're knocking say $100,000 off, or $20,000 or $50,000 off the coverage A, and then they come out and it's total loss, and they're saying, hey, you're more than 20% under, you're coming out of pocket. Mm-hmm. Another thing that I see a lot is other structures. It'll be zero. Now your other structures are things that are not attached to the house, but that includes a driveway. So on the state of Florida, your driveway is considered another structure, the patio or walkway to your house. So if something like were to damage the structure, or like say a big truck turned around in your driveway, that kind of stuff, those are other structures, and why not have it covered? It's a couple dollars on the policy. You might be saving yourself $100 a year if you took that coverage away. Yeah. But you could have a huge out-of-pocket expense. So fences, for instance, if the fence is not physically fastened to the side of the home, it's another structure. So if you have, anywhere around 50 to 100 feet, which I've seen some people have hundreds of feet of vinyl fence. I know what it would cost to put 20 feet of vinyl fence in my neighborhood. Yeah. So I can only imagine the, tens of thousands of dollars of out-of-pocket expense you have after a hurricane that's not going to be covered.
Yeah. Interesting.
Yeah.
All right. So total like dwelling coverage, other structures, like what are some other
big things? You're going to be your deductible. And I drive that one home a lot. People will say, give me the 5%. I'm in a tight DTI. I want to keep it under this number.
Yeah.
Moving your hurricane deductible from 2% to 5% may change your policy a couple $100, but you're talking about $5,000 to $10,000 difference on your deductible.
Yeah.
So let's say we get unlucky and there happens to be a storm 50 miles away from us, but you get some windborne debris or something goes through the roof, and now you've got a roof claim. And the insurance company comes out and says, sure, but unfortunately, this doesn't meet your $20,000 hurricane deductible. Mm-hmm. Stuff like that. Mm-hmm. Those are the ones that we see a lot, that we try to stay away from, and educate. And that's when the education comes back in.
Yeah.
Prepare that client for an out-of-pocket expense of, $20,000 if they have to make a hurricane claim.
Yeah, because at the end of the day, right, it's their decision.
Absolutely,
right?
100%.
If they want to do that, then by all 100%. Means. But here's the consequences of that happening.
Yeah, and then I know we're on the homeowners insurance portion, but I think a really, really important part is flood. And this is something that I educate a lot of my realtors with, is just like using different verbiage. I get a lot of people, the first introduction on the phone call when I'm doing my first discovery call, people are jumping it down saying, the realtor told me that this is in the flood zone, so I'll never have to worry about flood insurance. And I think that's just something really reckless to say, because technically every house is in a flood zone. It may be a low risk flood zone. X is still a flood zone.
Yeah.
Right.
Yeah.
So I think the verbiage from every realtor should always be great news. This is an X flood zone. That is the lowest risk flood zone. That means that you're going to have the cheapest flood insurance possible, because every home in Florida should be covered, unless you're on the top some hill somewhere that I don't know about. You need flood insurance, right?
Yeah, there's no.
So the good news is it's super cheap.
Yeah.
Now, and what we see a lot of too is the increases or the changing in the maps.
Yeah.
That's something that we always educate people on too. So when we run a risk, my rater will automatically run a flood quote, and then all I have to do is click on it, and it'll show me a picture of the flood map. And in a lot of places, especially like my neighborhood specifically in Riverbend, we're surrounded right on the anklet, right?
Yeah.
And that AE zone has actually crept in. One of our producers, Davis, he lives in the neighborhood. We watched his house go from X to X500 to AE, back to X500, and he's back in an X zone. But now to place flood insurance on that home is over $6,500. It's almost $7,000.
Whoa.
Yeah. So 6 months ago, he could have bought it. It was like $2,000.
Yeah.
That's the crazy part.
How often are they changing the maps? Like, is that
so it happens quite frequently, but when we see it, the last two times it's happened recently in our neighborhood, it happens in October. So every year they'll reassess maps and stuff, and it's usually around the fourth quarter of the year.
Yeah.
And that's typically when we see it. It's something they pay attention to, you know. If you're close to an AE zone, like an X500 or an X zone that backs up to an AE, it may behoove you to talk to your agent and talk about getting a quote, because what happens is if they switch to AE, if they expand that map, which the federal, the National Flood Insurance Program is $25.5 billion in debt. So my thinking is the way that they're going to get that money back is by rapidly increasing this flood map, right?
Yeah.
So if your home becomes X500 or X to AE, they notify the lender, the bank gets notified, and now they're going to tell you you have an X amount of days to act and buy a flood policy, or we're going to force place flood on your home. Force place insurance can be up to like 400% more than what a normal policy would be.
And so the homeowner has to pay.
Has to pay it. This was a crisis a few years ago when they started implementing these things, and there was stories all over the place that I was reading when I was going through insurance school. These elderly fixed income individuals whose homes were now getting increased to AE, and they were getting bills for $20,000 for flood insurance.
Whoa.
Insane. So, I mean, a lot of people, I have friends that bought down on Treasure Island back in 2014 and, didn't buy flood insurance at the time. They bought the house for cash, and now the house has like quadrupled in value. And to place flood insurance on that home is like $14,000.
Yeah. Yeah. Just crazy.
Wild.
It's crazy.
And that's, we're talking about someone who bought this house for less than 400 grand.
Yeah.
Years ago. Now the home is worth, $1.4 million. If they wanted to go get any kind of loan on the home, they'd have to have flood insurance.
Yeah.
And 14 grand.
Yeah. That's crazy. Almost. Yeah. So I like the idea of like, if you like own a home, just get flood insurance, even if it's in an X, right? Because it's cheap right now.
And you can keep once policy, you're in, so they used to have like a different rule. You used to get grandfathered into that rate, and that rate couldn't change. So if you bought X, you stayed X forever. Now what they've done, as of April, I believe it was April last year, I could be wrong, so don't quote me on that.
Yeah.
But they have made it so that your rate can only increase so much from X. So if you buy at X, it'll increase a certain value every year until you're up to where an X policy or an AE policy would be. You wouldn't have an overnight rapid increase.
Yeah. Okay.
Which if someone were to just say, hey, you have to go buy an AE right now.
Yeah.
It could be like in Davis's situation, $6,800.
Yeah. Okay. Crazy.
So it is. It's that's just, but that, like you said, if you get it early and you've got it, that's just a better, why not?
Right. Yeah. So let's talk about the roofs for a little bit on the homes, because that's been a big issue the last couple of years.
Absolutely.
Like what went wrong with all of that, and like when is it gonna change?
So I have
give us some hope.
I have friends in all areas of that, from the legal side, the legislative side, to the roofing side.
Yeah.
Property damage attorney side, all that.
Okay.
I think it got really out of hand. There was a lot of fraud happening for quite some time. There was very loose laws on that. Everyone, you can blame attorneys' fees, you can blame politicians, but there was definitely some wrongdoing in a lot of places. There's a lot of legislation that's happened over the last year, 2 years, and I think because of the lower loss runs that we've seen over the past couple of years, that we will see some lower premiums in the next couple. I think Q2, I think we're gonna see a couple drops in premiums on several carriers. Specifically in auto too. I think we're gonna see a better auto, but I know we're talking roofs right now.
Yeah.
It's just while it's on the top of my head. But as far as roofs go,
because that's gone up too, right?
Those have doubled.
Yeah.
So as far as the roofs go, that was a big thing for a long time. And now there's so many different rules with roofs. Whether you're talking citizens and if the roof doesn't have a permit, and like you said earlier, even other carriers are now requiring roof permits, proof that the roof was done to code. So it's creating a lot more work for a closing. If you get a notification on it, or if we can't find a permit, we have to go get the inspector to go back out there to do a roof certification. And then the roof certification doesn't pass underwriting. So that's another thing that we're having, is that we're telling people, okay, we're going to submit this. They have 3 to 5 days to get it back to us. Sometimes Citizens takes 10. Yeah. And then we finally get it back and it's a denial. Yeah. Where we go from there. Yeah. So now we've got to get stuff fixed before they can move in. And I've seen people lose the deals. There's been earth money lost over that. So, right. That's a big thing. What to look out for though on the roofs? What I would recommend is if you're the purchaser, do your research. You can get it. Anybody can get a Build-A-Fax account for free for a trial, right? Go on and pull the Build-A-Fax on your home or have a friend do it. Call me. So Build-A-Fax is, it's not always 100% up to date, but it's pretty darn accurate. And what it is I can type in an address of any property and it's going to pull all the records of any permits that have been pulled on that house. It's going to tell me the job type, size, and whether the permit was completed or just opened. Yeah. And so if I can look at that and know, like, I'll have realtors call me all the time, hey, I got this different addition on this house and it's a little bit bigger than what's shown on Zillow. Can you tell me if there was a permit for this? And I can tell them right away whether or not it was a permanent addition or not. But that's a great tool for us to use for many things, but specifically the roofs, because if there's not a permanent roof, there's a lot of, hey, my buddy will throw a new roof up there, $5,000, keep it under the table, save you a lot of money. Mm-hmm. Great. It's an awesome roof. It was done to code. Everything, the nailing pattern's right. The material's right. Now we just got to get somebody up there to certify it because the county doesn't have record of it. Mm-hmm. Yeah. Yeah. And that's been, the permits are always an issue, right? Because the county or the city in Florida, they haven't always been sticklers for that. Right? Well, so we have, agencies in every state with Goosehead and, I write business in several states, but and in Virginia, we don't have. If someone from Virginia calls me with a lead for down here and I ask them if they have a 4-point or a wind mitt or anything like that, they like, what's that? Oh, wow. Outside of they don't, there's no home inspections. They don't check the roofs. They don't look for permits. It's wild. It's the wild, wild west everywhere else. But you would think that, everyone would have the same kind of rules, but it's not like that. Yeah. Interesting. Florida's very, very, very strict on their, on the qualifications and the homes. The roof, something to look out for too is make sure on your policy that you're getting replacement costs for your roof. A lot, because of the legislation now, they've started roof scheduling. And what roof scheduling is it's basically ACV, which is cost less depreciation. So let's say you've got a 20-year-old roof, they're going to value that at $0. They're going to say it was time for replacement. The reason your roof got blown off was because it was old, right? So if you go to have a hurricane settlement, they're going to replace everything that was destroyed inside the house when the roof got blown off. But when it comes to actually replacing the roof, they're not. Bust out the wallet because you're going to have a big out-of-pocket expense. Wow. And those things, it's funny because I'll see it and I'll be training somebody on it. And they'll say, hey, what's that? I'll be, oh, never do that. But let me show you why. And you'll click it and you add that coverage. So you basically take this great coverage away, replace it with nothing, essentially. And it saves the client $100, $200. Yeah. To have a expense of $20,000+ when the roof, blows away. Wow. It's wild. Wow. All right. So this is a little off topic from insurance, but you brought this up. So let's talk about sourdough. Yeah. Man. I got a thing for it. I love sourdough. How long? I love eating sourdough. I haven't got to your level as far as baking with it and that sort of stuff yet, but when did this start for you? Okay, so I forgot you were gonna bring this up. Yeah. No, so it just sparked again recently. But when I was younger, one of my first real big boy jobs, one of my friends started working for this place called the Baker's Crust in Virginia Beach. That's where I grew up. And it was one of those things where it was hey, we're hiring, tell all your friends. And so before you knew it, there was 5 kids from the same neighborhood all grew up together. Mm-hmm. And some of them just took it as a summer job. But I graduated and I wasn't going back to school. And the guy who ran the main oven quit, just walked out one day. And they put me in there. And I loved it. So I learned how to cook French artisan bread from this guy named Philippe Goulon. I don't think I'm saying his name right, but I can still hear him screaming at me in the background. But now we did thousands of units of sourdough a day, but the starter that he brought over in the 70s, and it was 50 years old when he brought it over. Whoa. So when we were using it, it was 75, 80 years old. So I kind of thought that was really cool to have this living thing that's older than I am that we bake with every day. So I learned some tricks of the trade and whatnot from this gentleman. But then, moved on to bartending and service industry after that, and never just got away from it, never did it again.
Did you ever do it like personally back then, or you just for that job?
For work. It was like just for the work.
Okay.
Right.
Yeah.
But I forget how it started. I think like I was just like thumbing through reels one night and someone was making sourdough.
Yeah.
And I clicked on it, and then there was like a link in the bio, blah, blah, blah.
Yeah.
Took me to an Instagram. And then before I knew it, I was on Etsy buying starter dough.
Yeah.
Or starter.
Yeah.
And then I was on Marketplace, and some lady down the street was like selling $10 jars of starter. I was like, I'm gonna make some sourdough. So I went and got the little jar and started now like my wife's like, hey, when are you gonna stop doing this? Because it's just like multiplying.
Yeah.
Right. But yeah, no. So for like there was like a solid month there where I was making like a different loaf every day.
Oh, really?
Yeah. And that's
it's kind of involved, right? Like once you like, it's easy to keep the starter alive. I mean, I've like I got a starter like a month ago.
So you can once the starter's active, you can just put it. So the difference between like sourdough, I'll get into the science for you here.
Yeah.
So the difference between like sourdough and regular bread is sourdough is it's basically taking all the yeast from the like ambient air and creating leaven bread that way.
Okay.
So it takes a lot longer for that bread to kind of proof. That's why we use the starter. So the starter is basically just a concentrate of the natural yeast and bacteria. When you use commercial yeast, it's the same kind. It fluffs up way differently and has a different like I guess it digests differently.
Okay.
That's the way I understand it. I just like the taste of the sourdough.
Yeah.
It's way tastier than regular bread.
Yeah, I agree.
But it's an art. When I was trying to get back into it, I think I ruined like the first like 4 or 5. Like they wouldn't rise. They just look like little hockey pucks, super dense. So we have a lot of croutons. We have a ton of croutons right now.
I think like what I've learned in the first thing I made with sourdough was like with discard. I made discard bagels or whatever. Yeah. But it seems like it's like hard to really like mess it up, but like you said, there is an art to it.
Yeah.
There is like techniques, but there's
all about timing too.
There's a ton of different like techniques, right? Like it's not just like one way to make it.
So when we made it at the baker's crust, we had like to do it at the a certain time every day. There was like like on schedule, right? So that's kind of what you have to do. You have to replicate that same scenario at home. So we have like warmer climate here. So like back home in the wintertime, like it would be like an overnight thing. So here, like if I wanted to make, say I want to make sourdough like for like dinner, right?
Yeah.
I would take out the starter from, it'll live in the fridge unfed for months at a time. So you take out like 100 grams, put it in a bowl, 100 grams of flour, 100 grams of water, mix it up. And then by about 1, 2 in the afternoon, it should have proofed up to be like the starter would have been fed and proof up. When it's like at its peak, that's when you want to use it.
Okay.
But if you let it settle and you use it, then like the proof time for the bread that you're making could vary in hours. Okay. Right? So it's all about timing. If you missed it by 20, 30 minutes, it could cost you an hour or 2 on the back end.
Yeah.
But I think like once you get into it, you'll find a rhythm. Mm-hmm. And then you're like, okay, this worked this time. It'll work next time.
Yeah.
And then you stop doing the exact measurements. You start eyeballing stuff.
Yeah. I've seen that too, where it's like, you don't have to measure it out.
Yeah.
Yeah. I like that. Sourdough. So if you want insurance or if you need some sourdough bread or starter,
or starter,
hit up Andrew.
Plenty of starter. I've hooked up the entire neighborhood. All these ladies love me.
Nice.
Yeah.
I love that. The whole block. Mm-hmm. That's pretty cool. Well, where can tell people about like where Goosehead, where they can get your info and that sort of stuff.
Yeah. So they can always give me a call, and that's at 727-493-1893. Or sorry, 727-493-1898. But our website, the digital agent page where they can go and get an instant quote right away. It's goosehead.com/Andrew-Mellon. And that's goosehead, all one word, .com/Andrew-Mellon.
Yeah.
Mellon with 2 L's.
And we'll be able to we'll put that link in the description.
Perfect. So all they have to do is click on that, and then it takes like 2 minutes to fill out their information.
Cool.
It'll give them some random quotes up front. It'll give them an idea without running any kind of like motor vehicle record or claims report for the home. And then what we do is we take that information and we filter it through our rater and give a more accurate call and give a more accurate quote.
Yeah, love that. Awesome, man. Thanks for being here.
Yeah, thanks for having me, man. It's been great.